short while ago, I caught up with Carson Block, the founder of Muddy Waters. I started out by asking him about the Wirecard scandal, which Germany's financial regulator has, of course, now labeled a complete disaster. Carson has previously called the entire German financial establishment Moscow on the Main. Here's what he had to say.
I've been amused by the comments from BaFin and the head of BaFin and the Minister of Finance in Germany, because, I mean, BaFin was the most powerful accomplice Wirecard had. And I don't mean that in a facetious way, all right? But for BaFin, this company, the market cap would never have gotten to $24 billion. But for BaFin, investor losses never would have been the many billions of euros that they are. And but for BaFin, they would not have raised net 2.5 billion euro from the market. BaFin was the accomplice. So what does this mean? Look, Germany is a tough one to understand. What it should mean is that the guy you quoted is going to be looking for a job next week. That's what it should mean. And there are a bunch of other people from BaFin who should be looking for jobs also. Whether that actually happens, I don't know. But all the warning signs were there. The first warning was publicly made in 2008, then again in 2016, then in 2018, and in 2019. And every single person who spoke out about Wirecard was placed under criminal investigation. So what does this mean for my friends in Moscow on the Main? I hope it means there's going to stop being Moscow on the Main. But, you know, since they view, you know, hedge funds and private equity as locusts, although we have to say there were 3 journalists who were put under criminal investigation too, I don't know. They need to reform, or else their capital markets, I mean, I think their capital markets are hiding other serious wrongdoers. The thing with Germany is that we think of it as a law-abiding society. It is, generally. It's a high trust environment. And when you have that type of environment where people can assume that everybody else is following the rules, that's when some really bad behavior can flourish in broad daylight. And that's why they need to have a competent regulator. And so hopefully they'll work on those reforms.
I believe you exited your own Wirecard short. Why did you do that? And what does it say about maybe the difficulties of the short selling model?
So yeah, we were short Wirecard briefly in 2016 after, I think, the first Zatara report. And I can't recall how long we held it, but the thing is, it became clear to us, and that was also through our own dealings in Germany, where in 2016, we shorted a company there called Streuer. And the German authorities have been similarly unkind to us as they have to all of the Wirecard critics over the years. So the way that I started thinking about it was being short Wirecard was effectively being long regulatory competence in Germany, and I just wasn't willing to make that bet. Now, I wish we'd been short recently, obviously, and what I missed was that EY was actually going to show up and do the job that investors think that they're there for, you know, for the first time in the, you know, I think the entire public life of Wirecard. But that's what I missed. And looking back on it, it's interesting because EY has had a really bad run of things, which is why I think there was probably pressure from global headquarters on the German affiliate to actually dig into this. And it's kind of amazing that, you know, 2 phone calls to 2 bank CEOs in the Philippines would have yielded, oh no, this, you know, there are no accounts here. You know, for all these years, EY never did that work. But that's what I missed, was that EY, you have Luckin, you have EY at NMC, which, you know, we exposed in December and is already delisted. At EY auditing Burford, which not necessarily, we don't think it's a fraud from a legal perspective, but highly aggressive accounting, and that's something that we went public on last year in August. So I think EY is just having one of those really bad runs that, you know, the big four are prone to, or each of the big four are prone to from time to time. And they tightened up the audit procedures slightly in this case.
Since you point out that we have seen a lot of audit failures recently, I mean, Wirecard, Carillion, NMC, a bunch of others, what would you like to be done at the audit industry to, I guess, reform it or avoid this problem in the future? And is it specifically an Ernst & Young problem, or do you see this as a wider issue?
Well, the thing is, investors mistakenly assume that auditors are there to perform anti-fraud functions. That's actually, I'm not trying to be funny about this, but that's not what auditors actually do. So if senior management, and management prepares the accounts, so if senior management is committing fraud, then the professional standards of the audit profession will exculpate auditors from liability in most situations. And the other thing that we've allowed the audit industry to do that really allows this laxity to continue, well, I guess backing up for a moment, like I said, most investors do believe that auditors are performing an anti-fraud function. They also believe that the big four brand has some real value to it. And auditors do market themselves to the public as having, you know, big four auditors anyways, having a really strong brand that means something. And when there's no problem, people and money flow freely throughout the global structures. But the way that they set these up legally after Enron is that you have independent, well, supposedly independent entities in each country, and sometimes multiple entities per country. And so in good times, people and money are flowing freely throughout the structure. As soon as there's an audit failure, then all of a sudden it's, oh, no, don't come to EY Europe over this, or EY US. No, those are the guys in Germany, or, you know, those are the guys in China. And so the financial responsibility, we've allowed them to create this legal fiction that enables them to firewall financial responsibility for these screw ups. But again, that's not in the marketing materials or the commercials that they show during golf tournaments. So I think I really think there's a cogent argument that can be made that investors are better protected against fraud if there aren't audits, because audits provide a false sense of security. And what audits really are there for is to ensure that accounting standards, the proper accounting standards, are used, they're applied properly. But the reality has become that auditors effectively view management as their clients. And when management wants to be aggressive, you know, auditors are really there saying, well, how can we work with you? An example is a company that we shorted in April, a US company called eHealth, also an EY audit client. Their accounting, the way that they apply this new accounting standard, a relatively new accounting standard, ASC 606, we think is very aggressive. And we think this is a stock promotion. So they're recognizing 3 years of revenue each time they sign up a customer. And then they go out and tell the market, oh, value us on a multiple of revenue. Guess what? Insiders sell a lot of stock. Surprise, surprise, because the market has taken them up on this proposition. But we understand, and I haven't been able to confirm this, but in one of our conversations with a former senior executive from eHealth, we understand that it was actually EY that went to management and said, oh, by the way, this ASC 606 is going to come into effect. This is something you could probably adopt for the business and book all this future revenue. So that's really what an auditor is there for. They're there to make management happy. They're not there to protect shareholders.
This actually reminds me of something I wanted to ask you, which is how much of your research is based on public information versus tips or sort of proprietary research that you undertake?
Well, so in my business, when you're buying and selling securities, you have to be very careful about the word tip because there's legal significance to that. But in terms of, so how do we source ideas? Well, I don't think we've never gotten an idea, at least not one we've taken seriously, from a current employee of a company. I don't think we've ever gotten an idea that we've taken seriously from a former employee of a company. A lot of the way we generate ideas is we're looking for things that seem too good to be true, stock charts that have done this, poke at it a little bit. Is it really, I mean, in our view, nothing is as good as it seems, but the question really becomes, is the delta between perception and reality this, or is it that? So we also follow around people who've been involved in promotions and aggressive accounting and blow-ups and frauds in the past. So that's another way that we identify companies. And then sometimes it's conversations with investors who are already short a given name, and they pitch us on the idea. So and then other times it's conversations with investors who just say, I had a really weird meeting with the CFO, maybe the kind of thing that you guys would be into. So a few different ways of doing it, but we don't usually set up screens and look for ratios that are out of whack, because I just feel like you get a lot of false positives and a lot of false negatives that way, and it's not the best use of our time.
All right, well, let's talk about one of your ideas, GSX. Do you still have a short position on the company, and are you planning on releasing any new materials or new reports?
So we do still have a short in GSX, and as a result, I've been having conversations with investors recently, of course, because it's a big enough position that they're noticing when it closes up. But this is nothing we haven't seen before. I mean, it looks a little like NQ Mobile back in the day for us. But yeah, we have additional research. We do intend on saying more, but I mean, it's also kind of a strange situation, because I don't think the problem is that we failed to convince anybody. I think that the stock is doing what it's doing for technical reasons. And I think that there's, we understand that there's a lot of support through the options markets. You could see that somebody's kind of reliably jamming it into the close most days. Then also it looks like, a brokerage firm that's close with the company pulled a bunch of borrow. Then, of course, what's probably a very friendly brokerage firm in Shanghai put out a strong buy, and had a guy named Guy Gentile, blogging about a short squeeze last week. And, Guy is one of the more questionable characters in U.S. markets. So, I mean, somebody seems to be pulling out all the stops here to keep the stock price elevated. But at the end of the day, it's a fake company. And there are two things that can happen with a fake company. One, it can be acquired, or two, it collapses. And especially once the fake company is exposed. And I don't think this thing gets acquired. Back in the early days of China fraud, the China fraud 1.0 days, there were these zeros that were acquired. I mean, Harbin Electric, and I mean, there's a whole list of them. But the amount of money needed to buy those was much less than what would be needed to buy this. And the other thing that's going on here is the political environment in terms of China listings in the US is so much different now. And I feel like this is GSX jumping the shark, because the more the stock ramps, it really starts to look and feel a lot more like a massive middle finger pointed at Washington. And I just don't think that's the smart thing to do in this environment. And if the CSRC is serious about proving that it can regulate these companies, and that the US shouldn't be up in arms about the new securities law that confers exclusive jurisdiction for investigations and discipline upon the CSRC, then the CSRC should start looking into this and frankly cracking some skulls. If they don't do it, it's going to reinforce the perception that a lot of us here in the US have, and that is the CSRC is not intending to be a serious regulator of US listed China companies.
Well, can we talk about the CSRC for a minute, and the sort of relationship with the US at the moment? Do you see scope for cooperation between the CSRC and US regulators or bodies like the PCAOB?
Look, it's been pretty clear to me, to people in the US government for some years, that China has no real intention of cooperating with the U.S. authorities. They correctly gambled that the Obama administration would take this off the strategic economic dialogue list if they signed the memorandum of understanding with the PCAOB. I mean, look, I knew people who were commissioners at Peekaboo at the time. Nobody expected much from that MOU, and yet I think everybody still managed to have their expectations disappointed. So China to date has not shown any good faith in these matters, and I'd be pretty surprised if it does in the future.
All right, let's talk about the market more broadly. I'm curious what it's like to be a short seller when we've just witnessed the biggest global economic hit in decades and we still have stocks trading at very, very lofty valuations.
Yeah, well, I smile a little wryly because we did very well in March, and almost all of our P&L in a given year is going to come from trading short activist campaigns. And so March was probably the easiest money we ever made because we didn't have to go out and start any fights with companies. And, I honestly, I actually felt, it's weird, I felt really bad because we're making money. I know that the citizenry around the world is being decimated and that the bottom is falling out of the economy. And I felt bad, in a way, making a good amount of money in that environment. And well, April cured that because we gave a decent bit of it back. So that's what being a short seller's been like. Jokes aside, it's really depressing to see what has happened to markets. And I don't disagree with the monetary stimulus at this point in time. But what I disagree with is what I'm sure is going to happen in the future, and that is we're not going to get rid of it. Going into this, we had 10 years of emergency monetary policy. And policymakers, and particularly the central bankers, have warped markets. I see things on a micro basis, and we have seen for years coming out of the global financial crisis, just massive capital misallocation. My name is SoftBank for one, but we're gonna repeat the cycle. And what happens is it's just blowing bubbles. It makes everything more fragile. When all these companies' balance sheets were cracking in March, the relatively small number of us who actually short stuff are looking around and saying, yeah, we've been saying this for years. This is why you don't encourage risk taking, well beyond, when the recovery has started. So, as far as being a short seller, look, when these things go up, it obviously doesn't feel great, but I think a lot of us who do this are really emotionally invested in pure markets, actually. And it's just really depressing to see markets fail to serve their economic purpose, which is capital allocation, and become really an engine of increasing inequality. Because if you own financial assets, when these things happen, 3 years down the line, or hell, in this case, 3 months down the line, you're great. Everybody else in the world, the other 90%, is much worse off. And now you can go and buy their assets at fire sale prices. So this is not sustainable. And I also worry about that.
Do you adjust your own strategy at all? Because it feels to me like you built the business targeting frauds that were very vulnerable to a drying up of capital, companies that needed lots of capital coming in to maintain their growth strategies. In the current environment, there's no shortage of capital. Is that a factor for you now?
Well, you can't really compare us to, say, Jim Chanos, because so short selling is a niche, and we are a niche of a niche. So we are going to speak as a firm, 4 to 6 times a year about what we think are some of the most egregious offenses in the capital markets. They have to be liquid enough for us, and there has to be borrow, but that those offenders are still here in droves. And what I think happened in the financial crisis, or the recovery from the financial crisis, and it was happening in the lead up to it as well, but I really think that the morphine of monetary stimulus and of everything going up has just, I think it has led, for reasons aside from inequality, but I think it's led to some unraveling of social contract, and that market participants, especially managements, I think a lot of managements, CEOs started feeling like it's their God-given right to be able to sell $50 million worth of stock a few years after getting the CEO chair at a given company. And that has led to just aggressive accounting, misrepresentation. Sell side is completely co-opted. Gee, tell us by what metrics you want to be measured this quarter, and we'll forget about the ones from last quarter because they're probably not that good. Can you make up a new definition of EBITDA while we're at it? Yes, thank you. That's a sickness, and that's not markets serving their purpose of allocating capital efficiently. So, I think that game is just going to continue. So what does that mean? There will be more potential shorts with more market cap for us. But what I had noticed in the past few years is that the bar for what investors would care about in terms of problems at companies kept going up. I mean, investors were anesthetized to risk. And I guess that's one of the things that I really rue about this moment, is that anesthetization is like paying off, because they experienced a moment of, maybe I need to pay attention to, footnotes and things that could matter in a bad situation, to I said that, come on, I must have been drunk. So I don't know. I have a hard time really thinking about what the future of, markets in the, near, medium, and long term is going to be.
What do you think about retail participation in the market at the moment? Because it does feel like with all the liquidity flooding into the system, we have seen a bunch of new entrants, people trading on Robinhood, some people trading options. I was looking at the leaderboard of Robinhood positions before we had this conversation, and Luckin Coffee is pretty high up on that. What do you think about what's going on?
Look, and if the SEC didn't throw the flag, Hertz probably could have done a placement. I mean, this is certainly not value creating capital allocation that we're seeing. Probably hard lessons are going to be learned, but then again, if nothing is ever allowed to go down again, I don't know, maybe Dave Portnoy is far smarter than I am. And, I'm just working and trying way too hard at making money in the market. So I don't know. I mean, look, the rational me, and maybe the me that's schooled in the old way of doing things, thinks that this will lead to a trail of tears. But I don't know. A lot of us have been saying, we thought we had our, those of us who were naysayers, again, we thought we had our moment of vindication in March, when we saw these balance sheets crumbling and funding markets seizing. And, for a moment in time, we got to feel like we were really smart. And here we are feeling like the joke's on us. So I don't know.
I want to touch very quickly on NMC, another successful short for you. What inspired you to go into the UAE market in particular? That's a really tough market for criticism, really strong defamation laws. What led you to that market? And also, do you see yourself entering new markets, maybe moving away from China when you're on the lookout for potential frauds?
Well, okay. So look, NQ Mobile said, I mean, they lied about everything, so it was probably a lie, but they said back in 2013, 2014 that they had sued me for defamation in mainland China. So for all I know, there's a defamation judgment for, $1 trillion outstanding for me in China. I don't really care about that. And, if they sued me in UAE and they got, $1 billion and, my head to be severed, I don't think I would care that much either, because I'm not going there. There are certain trade-offs that I make in this business. And I know that when we short a company that has a serious base of power or, has contacts somewhere, there are a lot of countries I've crossed off the list of traveling to. And so UAE is one of them. So I wasn't bothered by that. Now it was a FTSE 100 company listed in London, and what got us interested in it, and it's a name that had popped up on our radar a couple of years ago. I think conversations with investors in the UK pointing out, it seems too good to be true. The margins are too high, dodgy management. What got us interested was actually last August when we shorted Burford, which was listed in London. And I sent out a tweet the day before we went public with our Burford campaign, and I wrote that tomorrow morning we'll be releasing a report 8 a.m. London time on an accounting fiasco, or something like that. And Burford dove. Burford went down almost 20% at one point on that non-specific tweet, but there were two other stocks that dove, one of which was NMC, and I think NMC went down 7 or 8%. And we were really fascinated first and foremost by the Burford reaction. And when I saw that, the analogy I came up with was that Burford's like this train and everybody's partying on the train, but they know that the train's going off the cliff, and the name of the game is they just want to jump off right before, well, if they can, right before it goes over the cliff. And so a lot of them thought that my tweet was the signal to do so. And I think, so that's my interpretation of that behavior. But when a bunch of investors or long holders of NMC did the same thing, well, that basically told us we need to look closely at NMC. And when the first thing that jumped out to us was NMC seemed to be taking pains to deny that it was using supply chain financing, or reverse factoring. But if you Googled and you kind of went through, several search return pages, you would see that it is issuing paper, or it was issuing paper that was included in supply chain financing funds. So right away we thought, okay, this is going to really hit management credibility. I mean, it was pretty low hanging fruit, but B, why would they be lying about that? And so, we dug in and we looked at some of these transactions, like the Bright Point Hospital, and pretty quickly figured out that the contractor for that was an undisclosed related party. And, the construction cost was probably 3x, the reported construction cost was probably 3x what it should have been. So they just, pretty quickly fell into place, and we're thinking, these are our kind of guys, definitely are.
And what about focusing more on other markets outside of China in the future? Is that the future?
Well, since 2014 or so, China's only been 20-25% of what we do. I'm fond of saying that China is to stock fraud as Silicon Valley is to technology. So if you like shorting frauds, you're going to always be paying attention to China. Mm-hmm. So I expect that in general, it'll be, like I said, roughly 20-25%. The markets in which we're active, Canada, US, UK, Japan, a little bit, we struck out once in Japan and we hit a single once in Japan. So I'd like to build upon our brand in Japan and understand really how to communicate investment theses better to Japanese. Hong Kong, Singapore, and continental Europe. It's funky. We did one thing in France, we did one thing in Germany. The French and the Germans both reacted quite poorly. The AMF raked us over the coals for 4 years, and in December actually announced that despite their spending a lot of money, and they must have, because I think we spent $1.5 million on legal fees ourselves, that they weren't taking any action. And and look, that's because we do things legally. It's not like we got away with it, but up until that moment, I wasn't exactly dying to jump back into France. Still not, but if there's something that's compelling enough and we feel like we can budget a couple $1 million in legal fees, and and that there's enough left over to make us and our investors feel like it was worth it, then then we'd be interested. And I now put Germany in the same bucket, even though that's been much, in many ways, a stranger experience than France on the regulatory front. But yeah, there's a price for everything. So we'll see about continental Europe.
All right. Well, we've come full circle to a Wirecard, it seems. I think that's a good place to leave it. Carson Block, thank you so much.